Do you doubt yourself after entering a trade? Have you ever experienced fear or anxiety while you're in a trade? Have you ever struggled to stick to your trading plan and you make impulsive changes along the way? In this video, I'm gonna explain to you everything that you need to know in terms of a trading mindset and how to be the best trader you can be. Yes, that's me. I have helped dozens of traders for the past 5 years. I have a private network, I have a free newsletter, I do one-on-one sessions. These are my stats, everything is verified. All the links are in the bio. You want to learn more about me, just go and check them out. If you enjoyed the video, leave a like, subscribe and comment. Because the change comes from the mind. The most important thing in trading is gonna be your psychology. Not the risk management, not the technical analysis. The psychology is the most important thing in trading. So let's break this down. Today's agenda will be understanding risk, explaining why we can lose any trade we take, trading strategy, how to make the best trading strategy for yourself, a summary of all this. First, let's talk about understanding risk. That's a quote from Mark Douglas. It says, people accept they can lose, but they do not accept the risk of losing. Read it again. People accept they can lose, but they do not accept the risk of losing it. These are two totally different things. First, let me explain to you what is a bad trade. Now, a bad trade is, let's say, after performing our technical analysis, we decide to take a long, we set specific stop loss, take profit, and throughout the trade, each downward movement of price triggers fear, while each upward movement ignites hope or greed. Okay? Let me give you an example. Let's open up TradingView. So let's say we have price, we decide to open up a long, let's say here. Okay? You have a stop loss, you have a take profit, okay? And then when price comes into it, you're in that trade, price goes down, you start feeling the fear. Price goes up, you start feeling the greed of going higher. That's an example of bad trade. Now, initially the market exhibits, gradually the market structure starts to shift, forming a series of lower lows and lower highs. As soon as we witness the first confirmation of this market structure change, we reassure ourselves that if the price goes below the lower low, or the predefined invalidation, we will close the trade. However, as the price creates lower highs, we begin to doubt our earlier decision and entertain the idea of the market might reverse upward. Nevertheless, the market constantly moves downward and we continue grappling with the conflict emotion. Either the position is gonna be liquidated or we're gonna have significant losses. Okay? That's a very, very common example of people who, let's say, they use soft stop, right? And price just goes down, 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 and they never exit and they just blow the account, right? And the same thing with the price moving up, they never take profit. That's another example. Remember, you're in a trade, you're in a deal, you buy something, you want to sell it higher, or you sell something, you want to buy it lower, right? That's the way it works. Now, what to do if you're in this type of mind frame? Because this is absolutely fixable, everybody has been there. First, you need to set a clear invalidation point for each trade. Know when to exit if it goes against you. Avoid holding a bad trade after hitting the invalidation. Don't hope for a reversal. If it hits the invalidation, just get out. You need to emotionally detach from the trade. You need to focus on the chart and the TA. Okay, that's very important. Now, we can lose any trade we take. There's 4 key points to that. Acknowledge and accept the risk involved in each trade before you enter it. Use SL and TP. Understand that trading involves probabilities and just have a probabilistic edge. Approach trading like a Xeno order, where the odds are in your favor over the long term, rather than a player seeking quick wins. Now, let me explain how this works. An example is the weighted coin. We're essentially betting on weighted coin that has 70% of landing the heads. However, we must avoid putting our life saving on heads because there's still 30% chance of losing them. Over a series of 50 coin flips, we become more willing to take the risk because more often than not, heads will be the result. Yet, even with this probability, we don't know what's gonna happen next. You're never 100% certain. There can be always the other side of the coin. You You can always lose. It's important to remember that any trade or TA can be validated by external factors. They can lead to potential loss, and no matter how promising our setup may seem, you can always lose it. Okay? Our trading strategy is designed to increase the probabilities of winning on the long term, like a casino owner, you know? Some players may win occasionally. Ultimately, the casino makes the profit at the end of the day. Let me show you an example of a trade which I did take a couple of days ago. It was the perfect setup. I did take it and I got stopped out. So, this is the setup. We had a liquidity level, got taken out. It was looking perfectly as a swing failure pattern. The CME chart was the perfect support which I was looking out. Okay, I got into this long position. Essentially the stop loss was below that low after the liquidity sweep. We had a market structure shift and everything. And then what happened? Boom, I got stopped out. It was the perfect thing, you know? Everything was perfect. And was I right on the trade because it went in my direction? Yeah. Did I get stopped into the last sweep? Yeah. Did I do anything wrong in regards to the trade? No. And that's the game. Sometimes everything will be perfect in terms of a setup. Let's say in this one was SFP. We did a sweep, we changed structure, then I got stopped out. But you know, it happens. That's why I tell you, it doesn't matter how perfect the setup is, you can always lose it. So it's important to keep that mind frame, to not get caught into previous emotions. You know, whatever emotions you had, just leave them behind. That's my best advice. About the trading strategy. So here is my advice about the trading strategy. Challenge yourself to work out a specific setup which you will take for the next 25 trades. Stick to this setup regardless of what others may be saying. Block out any external influences, and for each trade use $1 as initial investment. Keep a detailed record of each trading result, what went wrong, what could be improved. After completing the 25 trades, assess your win percentage. Make adjustments, make it better. And if your win rate is higher than your loss rate, maybe you want to scale that up for the bigger trades. However, be mindful of any tendencies to exit trades prematurely or change your strategy when dealing with big trades, big size. If this happens, just go back to smaller. Taking trading seriously requires you to complete this challenge. Focus on making $1 trades to build this discipline, to build this consistency before you scale up. If you can successfully complete this challenge with $1, there is no reason why you cannot do it with 100k. And the goal is to develop a systematic and robotic strategy that eliminates emotion. Have that strategy, have that setup which you want to take, and just complete that thing. Now, these are 11 principles which I follow and I want to share them with you. Dealing with losses in trading is crucial. Instead of dwelling on losing trades, focus on learning from them and move on to the next one. Emotions must be controlled. You know, your emotions, you cannot switch them off. You're always gonna have them. You just need to control them. That's all. Understand them, go into them, dive in, ask why am I feeling this, what happened there, what did I do wrong, what could I improve, and that's it. You need to understand your strengths and weaknesses. You need to capitalize your strengths, and you need to work on the weaknesses, because everybody has different strengths and different weaknesses. So just analyze your data, see why you're good, see why you're bad, and just get improved. You need to detach from the monetary aspect of trading. You know, don't concentrate on the P&L. Leave the P&L behind. Focus on the win rate. Focus on the trades you take. Focus on the win rate, the risk reward. You know, this is your focus. Your focus is performance, not P&L. Money will come. You know, money follows the performance, not the other way around. You can have good P&L but bad performance. Long term, you're gonna lose money. You need to have good performance, and the P&L is gonna follow the performance. That's it. You need to have self-belief, and you need to have perseverance. It's important to strike a balance between confidence and humility, okay? You need to be humble, because the market is gonna humble you if you're not humble. To trade effectively, you must internalize market information and develop observational skills. The market is 24/7, you need to be intuitive, you need to make informed decisions, okay? It's the most competitive sport. You need an open mind, you need to be non-judgmental, you must be adaptable, you need to let the market guide your actions. And leave any rigid beliefs behind, because they're gonna slow down your progress. You listen to the market, adapt your trading style, because the conditions, they're always changing, right? So you need to adopt to whatever is working right now. I remember years ago when RSI and MACD were perfect, then people started using them because there was a lot of people that used them, they stopped working. Now, there's different tools which work and different tools which not work. So observe, identify, improve. You need to avoid self-sabotage, because there's always could be some kind of a self-sabotage where you sabotage yourself. You need to observe and be honest. That's very important. Be honest with yourself about your trading habits and tendencies. You must embrace challenges. You must engage your brain to keep trading approach fresh and adaptive. That's very important. You need to stay focused on the present moment and the next trade. And rather than getting caught up in past successes or failures, you need to stay focused. I'm gonna read it again. Stay focused on the present moment and the next trade, rather than getting caught up in the past success or failures. Very important. Forget the previous trades. They don't matter. Focus on the one that you're doing right now. Okay, so these are 11 principles which you need to follow. Generally, the summary is the following. You need a plan, you need a strategy, you must accept that you can lose any trade, and you need to stick to that plan until the very end of the data set. It's that simple. So thank you for staying until the end. My name is Nikola Daskolov. I am the founder of ND Capital. You can email me at admin@ndcapital.network. This is my website. If you want to learn more about me, check the links in the bio. Thank you.